I think we talked about this last week that we're got a travel day tomorrow, and a couple other little things to talk about. We're going to be out of the office tomorrow. We'll be available by cell phone, but we'll otherwise be out. And then next Wednesday, Thursday, and Friday will be the same thing. We'll be out of the office, but available by phone and trading remotely. If anybody needs us during those times, please reach out to us on our cell phones. We don't like to be in a position where we have to leave the office very often, but the next couple of weeks are the exception to the rule. And then after that, I think we'll be homebound consistently like normal for a while. So today is market chat. I'll probably do another video Thursday or Friday, depending on how the week goes. And then next week, I'll send it out also on Tuesday before we head out as well. Another housekeeping item is that we are launching a text service, not a new service, we're a text program where we can deliver all of our links and videos and communications to you by text. And so if you get a text from a strange number, that is most likely us. Look for the content of it and just go ahead and accept it and save it as a contact in your phone so that you'll know it's coming from us. Okay, with that, I'm going to jump in here and get going. Obviously, today we saw a lot of exuberance in the marketplace. If you have been listening to us for the last several weeks, you know this isn't a surprise. This is what we've been expecting, something similar to this, and I think that we're in the camp that it's going to continue, and we expect it to continue for some period of time. So I've got March soybeans up in front of you, and I kind of want to put this whole thing together for you. You know, so many people look at one thing, and then they laser in and they overfocus on that one thing, and they end up missing the whole story. And so a lot of people focused on this downtrend line that went from the summer highs and just held the market, right? They held it for June, July, August, September, October, November, and there was just so much pent-up bearishness into here. And that stems from a market psychology that's been rooted for now 5, 6, 7 years, because ever since the peak in 2020, we had a sharp, precipitous fall, and we never retested any highs. And so the expectation, which is a heuristic called recency, the expectation is that that's going to repeat itself and that we're going to have an event like this, and it's just, and the story is just done. And I think that those people that are focused on that have become so focused on it that they're blinded to everything else that's been happening. And so, and we try really hard not to do that, although we do have a tendency to get bulled up and only focus in on bullish things, and I understand that. But the reality is that for the last 6 months, this is all a big sideways move. Yes, it encompassed a almost $3 a bushel range. And that's a massive range, right? We went up $3, we came back down $3, and we consolidated, and we've journeyed a lot of dollars and cents up and down since. But what's been happening in the marketplace is really unprecedented. And I think we're at the beginning point of the market recognizing that we're at an intersection of what I think are really three overwhelmingly bullish fundamentals. The first fundamental that's overwhelmingly bullish is demand. The amount of soybeans and the amount of corn and the amount of wheat that the world needs in total is higher today than it was a year ago, 2 years ago, and at any point in human history. We need food, period, end of story, and we have not grown ourselves into a giant surplus. A second piece of information that is absolutely massive is that we have had poor growing conditions in other parts of the world. I'm not saying that they're total failures, but they're not records. Now, here in the U.S., we harvested a record crop, or near records, and South America harvested a less than stellar crop. And what's going on right now is that the South American crop is on the ropes. It's not getting the moisture that it needs. And so if you read the market, if you read people, they're going to say, well, hey, rains will come. It always does. And it might. It absolutely might. But the market is telling you, even though we raised a huge crop, and even though last year's Brazilian crop was huge, we don't have the residual supply to withstand anything else because the food demand is so much higher. So fundamental number one is demand. Number two is weather. Number three is this underpinning support from the oncoming changes in the energy industry, where we're going to be using soybeans to power jets. That is a massive fundamental shift that's happening under our feet, and the market hasn't really absorbed that. Think 2006 and 7 in the corn market when you think about the soybean market today. So the market's got three independent fundamental drivers that are compounding on each other and coming to a point as we speak. And then the fourth driver, which is just like an extra to me, it's just ancillary, which is the inflation case. I don't think that our food situation is relevant or is caused or even has priced in inflation. I still don't think it has, because the fundamentals simply warrant where we are relative to historical pricing. So now let's talk about where we are in beans and what we think might happen. Okay, I've got a lot of stuff congested over here into the right edge of this chart. Okay, we use lots of different indicators, and we try to read them all together. And so, if you're reading a story, the author might give you facts that may lead to different conclusions. And your job as the reader is to try to sort it out and figure out the clues and try to guess. Well, we do that too with technical indicators. There's not any one of them that's right all the time, and there's not any one of them that is perfect. But when they start to line up, that's when you really got to stand on your head and pay attention. And beyond the indicators, we look at them across multiple time frames. And when they line up across time frames and across indicators, it's a really powerful signal. And so I'm not going to jump into all the different time frames, but I am going to give you a few of these indicators here in order to kind of set the stage for you, okay? The first thing I want to give you are these numbers here. So these numbers are plotted by an indicator called TD Wave. It's a Tom DeMark indicator that plots a mathematically driven Elliott wave count. For those of you that don't know Elliott, it's not voodoo. You can look at any chart in any time frame and see a rhythm and a pattern to the market. We tend to move in what we call impulsive waves and corrective waves. Impulsive waves move in series of fives, and corrective waves move in threes. And so when you look at a three-wave pattern that is overlapping and corrective, this is what this is, all the way down sideways. And we know when we count from the beginning of 2020 through this peak, we know that we have 5 on the daily chart, but we only have 3 on the weekly. And so we know that we needed a big fourth wave, even though it got deeper and took longer than we thought. And then that should give birth to a new 5-wave sequence to the upside. You've got your little 1, you've got your 2, and now you broke the wedge line here, and we exploded up higher. In this sequence here, we expect it to break down into 5 waves as well, and we think that we're in 1, 2, 3. Here's 4, and now we've got a fifth of 3, and then we'll have a 4 and a 5. So if you follow all that, we think that we've got another. We think that this sequence is going to continue on, and I'll get to where we think it's going to terminate pretty soon. Then we'll have a fourth wave, and then we'll have one more push higher in sometime this spring before it really comes to an end, and we're going to should have a deeper correction. Now, supporting that argument, and that this is a impulsive move up, is the force index, is the RSI, is the MACD, is the cloud. Every one of the indicators that we follow supports the same reading, okay? I'm not going to break down and go through each one, but each one is supportive of that read. Um, the So the expectation of what we think will happen, all these numbers represent Fibonacci targets based off of the pullbacks in this up move, okay? So this line right here comes from the down target, comes from the decay measured from the peak here all the way down to here, okay? So the three-wave move. And this target actually preaches all the way up to 1540 is target 1 and $16 is target 2 against March soybeans, okay? So that's your large degree primary wave count. Your intermediate degree count comes off of this low here, which projects up into 1395, which is where we stalled or almost reached today. And then above that, 1423, okay? And then above that, $15. Given where we are and how explosive this is, I think this is going to get chopped through. At a minimum, I think we're coming to 1424, and we may push as high as $15 given how dire the situation is in South America, okay? And then the third piece comes from the decay off of this wave, which is a smaller degree before we can get into here, and it points up here to 1412, maybe up to 1445. So I think it's safe to say, hey, look, the market's recognizing that we've got issues in South America. There's a reason that we held $12, $13 for 6 months in the face of one of the largest crops in U.S. history and a large South American crop. There's a reason for that, and we're not out of the woods yet, so we should propel on up higher. I don't see anything in here that would suggest otherwise, and so I think the game plan is just sit tight. Don't overthink it. Don't overtrade it. Let it come to you and sit back and let it work its magic. Okay, now corn. Let's do the same thing with March corn. All right, here's March corn. We've got I've got too many lines on here, so I'm going to try and make this a little simpler. As far as our wave counts go, we have the same structure. We have the early high. We have a corrective pattern. We have A, B, and then this is all corrective in here. This entire move from May clear through the September and October lows were corrective moves. Okay, everything since then has been kind of a lazy upward structure. I think today started really the first move, the first day of a larger move to the upside. Where does that count to? Well, it counts all the way up to $7 on your first one, on your first target, and it counts much higher than that on alternate targets. Sorry about that. The how high it goes depends on how dry it gets. Now, if you read the talking heads and you read people on corn, they're going to say, well, exports are slow, demand is slow. Well, it's not. Actually, we're on pace to reach the USDA target, and we're holding these levels in the face of the largest crop that we've ever harvested. And I don't know what to tell you other than we're inverted in the face of the largest crop we've ever had, and that is bullish in and of itself. Even knowing that the demand has underperformed some people's opinions, and Ukraine had a big crop, and South America planted a bunch of acres, and they should have big production. The market's telling you it doesn't care, and something significant is happening. So I don't know which will lead, corn or soybeans, but I think they've got to duke it out for acres, because I don't think either one of them can tolerate any acreage shift or loss, because the same fundamentals driving beans are driving corn, right? You have overwhelming demand on the front because the world needs more of it than it ever has. You have weather issues both here and abroad. And then third, last but not least, you have ethanol and renewable energies on an uptick and very, very wide and profitable grinding margins. So I don't see any reason to get nervous on corn here or to start dumping it. And I really believe that if somebody's not in a re-ownership position, they need to be, because we should put pressure on this high, maybe even yet this week, could be sometime next week, but definitely should be sooner rather than later. So what happens if I'm dead wrong and we turn around and we come back down? Well, honestly, yesterday's low it would be a major critical point, and beyond that, this low down here at 581 is a number that we don't want to see fall. So 581, 584, somewhere in that range. We got too close to comfort yesterday. Somewhere in that range is our ripcord. Below here, we want to get more aggressively sold and more aggressively hedged, because that would tell us that something maybe is not lining up. Okay, for soybeans, the same thing. If we see no follow through to today's action and we come back down and break out these prior lows, then I think that we have issues in beans, and maybe something's wrong with our analysis. That doesn't mean that we were dead wrong. I think it would mean something changed. And at this point, I don't know what it would be that will change it. But I think the best reading and the best case right now is you got to sit back and let strength do its thing, and get out of its way. Okay, so what about wheat? Wheat has had kind of a rough few weeks. It's been really choppy. It's been really sideways. And if you're paying attention to what I'm talking about on the waves, is that when you get choppy moves like this, it's typically corrective price action. So if I overlay our wave indicator here, look at what we have on the daily chart of wheat. Okay, we have an impulsive move up. We have a slop and chop down in 2. We then have a big impulsive move up here, and now we have slop and chop all the way down into here. And what we could end up with here is an explosive move up out of here to attack this new high and up into a 5th wave. I don't think anything's changed in wheat. We haven't grown any more of it or produced any more of it anywhere on Earth in the last week. Yeah, we're not exporting a lot of it, but that's okay. That doesn't mean that it's not valuable. It actually means that we need to store it, and our market's job is to take the wheat out of the supply chain if we need it. So I think there's complicated things happening here. If corn goes much higher, wheat has to go with it. It does not have the room to break significantly. So I think this wave count here, 3, 4, 5 is correct. If we look at the weekly chart, I think that it's right here as well. Let me clean this up just a touch. Got too many numbers. You can see a 1, 2. Remember what we said about weekly chart, about waves. 1, 2, 3, 4, 5, right? This is telling you that wheat is just getting ready to go. So we've got a 1, 2, and now this move up here is a new little 1, and we're getting ready for 4, and we're getting ready for 2, and up higher. So I think wheat is going to be trading significantly higher. And hold on, I brought up the wrong chart. I apologize for that. We've got to go back to here. Here's our wheat chart. Okay, wheat. Same thing. Here's our deal. 1, 2, 3. This is a little intermediate 4 before we come up and finish a wave 3 in wheat. I think somewhere up here in this 950 range before we get a 4 and then one more thrust higher. So I think wheat's got a long ways to go. I think it's got to go with corn. I think it's got to go with beans. And I think we've got to just continue to play the long side of these markets and sit back and not worry about it. I don't think we're going to go up forever. And so I want to be really clear on this. I think that we're in the last 6 months or the last 8 months of this upcycle. I think that these big waves, these big moves are going to get overblown. I think they're going to get overdone because the funds are going to chase it more aggressively than maybe that they should. So at some point this year, I do look to be flipping tune and getting short these markets for multiple years at once, because I think that we'll peak them out at some point. But So pay attention to your news cycles. When you are reading things like wheat exports are terrible and we're overvalued in the world market, the bean supply in Brazil is going to overwhelm the U.S. supply, and this wall of beans is going to come in and drain our markets. And the corn market is overdone because Biden's going to kill all the cattle and we're not going to feed any. When you're reading those kinds of things as the market is advancing, it's a clear indication that the move higher is not yet done. When these moves are done, the bearish sentiment won't be there. Those analysts will be the ones wanting to buy it when this thing is done going higher. They will be the last on the ship because the fundamentals will appear the most bullish when it dies. Remember, bull markets die on euphoria. Okay, they grow on optimism, but they die on euphoria, and we're not there yet because we've got too many naysayers in the marketplace. So we're resolved to sit where we are and be very, very patient with these markets until something materializes that forces us to change our mind, and that has not happened yet. Okay. Remember, accept your text messages. Put us in your phones. We'll be out tomorrow, and then we'll be out next Wednesday, Thursday, and Friday. So look for texts and emails to communicate with us. If you need us, call us by cell phone. Remember, there is extreme risk in trading futures and options, and you should only do so in light of your own financial condition. We are happy to work with you and help you work through any issues that you have. I hope you have a great week. We will try to keep you posted, and we'll talk to you soon. Thank you.